On a foggy London morning in 1936, King Edward VIII signed his abdication papers. The official story was simple. A king chose love over duty. What the papers didn't mention was the Swiss bank account that had been quietly accumulating deposits for months, or the coded telegrams between Buckingham Palace and a discreet investment firm in Zurich. The Duke of Windsor would live comfortably in exile, his lifestyle funded by investments that officially didn't exist. This is another video where money, power, and history collide, and nothing is ever as simple as it looks. We think of royal families as living symbols of tradition, their wealth tied to ancient lands and ceremonial duties. Their finances appear transparent: parliamentary allowances, crown estates, and public scrutiny. The British monarchy publishes annual reports. The Dutch royal family declares their expenses. Everything seems accountable, regulated, and above board. This surface story masks a parallel financial universe that operates beyond public view. For centuries, European royal families have constructed investment empires that span continents, currencies, and legal systems. These aren't the crown jewels locked in towers. These are sophisticated financial networks that would make modern hedge fund managers envious. The system works through layers of legal separation. Royal families don't directly own controversial investments. Instead, they create what financial historians call beneficial ownership structures. A trust in Liechtenstein owns shares in a holding company in Luxembourg, which controls a private equity fund in Switzerland, which invests in everything from African mining operations to American tech startups. Consider the House of Orange in the Netherlands. Queen Beatrix's wealth was officially estimated at €200 million when she abdicated in 2013. The real figure was closer to €2 billion, spread across dozens of investment vehicles. The royal family controlled significant stakes in Royal Dutch Shell, not through direct ownership, but through a web of trusts and foundations that traced back to 19th century colonial investments. The mechanism is elegant in its complexity. Royal foundations ostensibly focus on charity and cultural preservation. The Beatrix Foundation supports environmental causes. The Orange Foundation promotes Dutch heritage. These foundations receive donations from anonymous benefactors who happen to be investment funds controlled by the same royal trusts that founded the charities. Money flows in circles, each revolution increasing the distance between the royal family and their actual investments. The Queen of the Netherlands doesn't own oil stocks. A foundation promoting sustainable development owns them, having inherited them from a trust established by a long-dead prince who invested colonial profits in energy companies. Prince Charles perfected this model through the Duchy of Cornwall. The duchy appears to be a traditional agricultural estate, generating rental income from farms and villages. In reality, it functions as a private investment office managing a portfolio worth over £1 billion. The duchy owns urban real estate in London, offshore wind farms, and venture capital funds investing in biotechnology. The duchy can make any investment as long as lawyers can argue it serves the future needs of the Prince of Wales. This clause has justified investments in arms manufacturers, pharmaceutical companies profiting from NHS contracts, and private prisons. Prince Charles benefits from these returns while maintaining plausible deniability about the investments themselves. The most sophisticated structure belongs to the House of Savoy, the former Italian royal family. After losing their throne in 1946, they transformed from deposed monarchs into one of Europe's wealthiest dynasties. The family's lawyers created the Savoy Foundation, technically a Swiss educational charity. The foundation owns 47% of a Monaco-based investment company, which controls stakes in luxury hotels, defense contractors, and rare earth mining operations across 3 continents. Prince Victor Emmanuel IV doesn't appear on any Forbes list. His wealth is technically owned by a charity dedicated to preserving Italian cultural heritage. The charity happens to generate returns that fund his lifestyle, while financing investments in industries his royal ancestors could never have imagined. The system thrived on secrecy and regulatory arbitrage. Swiss banking laws protected account holders. Liechtenstein trusts operated beyond the reach of European tax authorities. Monaco offered residence without meaningful financial disclosure requirements. Royal families could maintain their public roles while their private wealth grew invisibly across multiple jurisdictions. The 2008 financial crisis shattered this comfortable arrangement. Governments desperate for tax revenue began sharing financial information across borders. The Paradise Papers and Panama Papers exposed the offshore structures that wealthy families had used for decades. Suddenly, the elaborate legal mechanisms that protected royal investments became liabilities. Queen Elizabeth II's private wealth became a public relations disaster when leaked documents revealed Duchy of Lancaster investments in offshore funds linked to tax avoidance schemes. The Duchy had invested in companies connected to dictators and human rights abusers, all while the Queen publicly supported human rights initiatives. The Dutch royal family faced parliamentary questions about their shell investments, just as the company was being criticized for environmental damage. How could the royal family promote sustainability while profiting from fossil fuel extraction? The royal response was technically accurate and morally hollow. The family didn't own shell stocks, their foundations did. Media attention destroyed the plausible deniability that made these structures effective. Royal families began liquidating controversial investments and simplifying their holdings. The House of Savoy sold its mining interests. The British royal family divested from several offshore funds. The complex structures remained, but the investments became more conservative and transparent. The names have changed, but the behavior hasn't. Modern tech billionaires use similar structures to control companies while minimizing personal liability. Mark Zuckerberg's charitable foundation owns Facebook shares that allow him to maintain voting control while claiming philanthropic motives. Elon Musk's companies cross-invest in each other, creating a web of beneficial ownership that obscures his actual wealth. Sovereign wealth funds now play the role that royal trusts once served. Norway's government pension fund owns stakes in companies across every industry, while maintaining the fiction that these investments serve the Norwegian people's retirement needs. The fund invests in arms manufacturers while Norway promotes peace, and in fossil fuel companies while the country champions environmental protection. The digital age has created new opportunities for beneficial ownership structures. Cryptocurrency investments can be held through decentralized protocols that make traditional ownership concepts meaningless. A royal family can benefit from blockchain investments without technically owning any digital assets. Royal families didn't invent financial secrecy. They simply perfected the art of beneficial ownership, creating legal structures that allowed them to profit from capitalism while maintaining their symbolic roles as moral leaders. Their investment empires reveal a fundamental truth about wealth and power. The people who benefit most from any system are usually the ones who helped design it. The most successful deception wasn't hiding their wealth. It was convincing the world that their wealth didn't matter.